Today we're diving into the fast-paced world of Crowdstrike, where hackers get the boot and investors might just get some serious gains. Before we get into the nitty-gritty, just a reminder, this isn't financial advice. Think of it like Crowdstrike's Falcon platform. I'm here to protect you from confusion, but you still need to do your own deep dive. Ready? Let's break it down. So, what's Crowdstrike all about? Well, think of them as the high-tech bodyguards of the internet. Crowdstrike is a leading provider of cloud-delivered cybersecurity solutions, and their main gig is protecting, well, everything: endpoints, cloud workloads, identity, and data. They offer subscriptions to their well-known Falcon platform, which is packed with modules for threat intelligence and managed security services. Founded in 2011 and headquartered in Austin, Texas, CrowdStrike now serves a global customer base. They're not just about hunting down hackers, they're also focused on things like zero trust identity protection and cloud modules, which are basically like setting up high-tech laser beams around your data. Now, let's talk numbers, because CrowdStrike has been growing faster than a hacker's attempt to guess your password. CrowdStrike posted 963.87 million in revenue in Q2 of 2024, and their cash flow from operations hit 326.64 million in the same quarter. They've got a strong global customer base and are expanding rapidly, thanks to their top-tier cybersecurity solutions. With a gross profit margin of 75.3% TTM, it's safe to say they're pretty darn profitable. In fact, since their 2019 IPO, CrowdStrike's stock has skyrocketed 452%. Over the last 5 years, the stock is up 515%, and in just the past month, it climbed 23.57%. They've managed to turn a net income of $170.2 million, while their operating cash flow hit $1.33 billion. And with $1.11 billion in free cash flow, this company is swimming in cash. Seriously, they're holding $4.04 billion in cash and short-term investments as of July 2024. That's some serious momentum for a company battling the internet's dark side. But hey, even cybersecurity giants make mistakes. Let's talk about the elephant in the room. Back in July, CrowdStrike deployed an errant software patch that wreaked havoc on Windows devices worldwide, causing major disruptions to airlines, 911 services, and more. The fallout wasn't pretty, with the stock initially dropping over 20%. Investors and customers had plenty of questions after that. But here's the thing, CrowdStrike didn't hide from the mess. They owned up to it in a recent earnings call and took 3 key steps to make sure it doesn't happen again. 1. Granular content control configurations that let customers decide when and where updates are deployed. 2. Quality assurance enhancements to catch potential issues earlier. 3. Engaging 2 independent third-party vendors to review their software security and update processes. Despite the July incident, CrowdStrike has secured some major wins. Take these 2 deals as proof. An 8-figure deal with a major enterprise software firm, where Falcon Cloud Security became their go-to platform, ousting a previous vendor. And another deal, a 9-figure deal with a customer deploying Falcon across 1 million computing hosts, showing just how sticky CrowdStrike solutions are. On the numbers front, Q2 2024 results were solid. Revenue of $964 million, up 32% year over year. Annual recurring revenue climbed up to $3.86 billion from $2.9 billion in Q2 2024. Net new annual recurring revenue was $218 million, up 11% year over year. Adoption of CrowdStrike's platform continues to grow too. A whopping 48% of large customers, those spending $100,000 annually, now use 8+ modules from CrowdStrike's suite, up from 41% last year. The message is clear. Despite the stumble, businesses trust CrowdStrike to protect them. CrowdStrike's leadership didn't shy away from the misstep. In fact, company president Michael Santonas even accepted the Most Epic Fail award at the PNI Awards, acknowledging they got this horribly wrong. But here's the thing, accountability matters, and CrowdStrike clearly has learned from this. And yes, the July incident will have some lingering effects. Longer sales cycles and extra scrutiny from CEOs and directors mean it's not exactly back to business as usual. As a result, CrowdStrike lowered its full-year guidance slightly, expecting revenue between $3.89 billion and $3.9 billion. Even after the stumble, CrowdStrike is still a leader in a space that's growing fast. Cybersecurity is becoming more critical every single day, and CrowdStrike's cloud-delivered solutions are well positioned to remain at the forefront. With $4.04 billion in cash, $791 million in debt, and $2.89 billion in total equity, their balance sheet is solid. Sure, shares are trading about 75 times projected full-year earnings, which isn't cheap, but considering CrowdStrike's potential for long-term growth, if all goes well, analysts see 22% annual returns as a possibility over the next few years. Combine that with leadership's ability to adapt and learn from mistakes, and you've got a company worth watching. Thanks for joining me on this cyber journey. Until next time, stay safe out there, both online and in the market.